it's Mickey here. So I wanted to go over a quick little class of supply and demand because I'm getting a lot of questions this previous week, and as I was grading some of your homeworks, I'm noticing that we're like completely missing the concept of supply and demand zones, and we're getting them confused with order blocks. So supply and demand zones and order blocks are similar, but they're not the same. All right, so let's get after it. So right now I'm looking at the cable versus US dollar, so the British pound versus the US dollar, and I'm on the monthly chart. That's why I always start, remember that top-down approach, so you go from the monthly to the weekly to the, because like the higher the time frame, the more justified the liquidity is that you're hunting for, right? So to explain supply and demand, I have to explain a fair value gap, right? And the difference between a liquidity void, right? So a fair value gap consists of 3 candles. All right, so pretend like we're in a downward trend, or an upward trend. It doesn't. Well, in this case, it would be a downward trend, right? All right, and we get a sharp movement to the downside. So candle number 1. So I usually live by bodies first, but there's a couple times where wicks do play a huge factor into it too, right? All right, so these are the wicks, these are the candles, right? And we get a sharp movement down, right? And this movement down is institutional banks or central banks like moving the market fast, manipulating the market fast, so the buyers get trapped out and the sellers get trapped out, because eventually it's going to return up here in a sharp manner. All right, so this candle, it started shooting down, and then the buyers came in and brought it back up, and then the sellers came back, and it closed right there, right? This candle, it shoots down, right? All right, it shoots down too far for the central banks to get all the orders, right? Because remember, to make it a supply and demand zone, we have to go back to the basic rule of every buyer needs a seller and every seller needs a buyer, right? So this one just sells, is just full of sellers, and it happened at such a fast pace that the central banks, the global banks, couldn't keep up with the order flow of things, right? And then on this candle, it shoots back up, but only makes it to this level, and then it comes back down and closes right here, right? So this area between this wick and that wick right here is the gap, right? It's price inequality, I don't know what I'm trying to say. It's a gap, right? You got sellers, but you don't have buyers, right? So with that being said, we have a supply zone created here, right? Let's find one on the chart that looks like this. All right, so we have a fair value gap right here, all right? You see how candle 1, wicks goes to here, then we get a sharp movement to the downside, and the next candle, it doesn't have enough juice to come all the way back up, so we created a supply zone. So we take the candle before the sharp movement down, we start at the wick, and we draw it up to the highest area, right, of that swing, right? So in this case, it's right here, right? All right, and then it shoots down, right? And because this is a supply area, because if it was on the bottom, it would be a demand area, right? We know that at least the rules are usually 50% of the gap, but most of the time, 90% of the time, it will make it back into the supply zone, right? And all it needs is from 0 to 50%. It depends on like how much liquidity and orders were left here. And as you see, it goes sharply down. It usually takes the time going back up, right? Because at the time, the global banks are collecting all the orders, and that takes time, right? And because this is a monthly one, it took months to like collect the liquidity here, because that's a crap load of orders, right? All right, but what I will tell you is it always returns, because the banks lost money on this manipulation run up, right? And because they have all these sellers and no buyers, right? So that's liquidity here in the form of sellers that need buyers. They have lost money manipulating the market up. They have stop losses at this high right here, and they have buy orders right here that we will eventually see get taken out too, right? Alright, so it slowly moves back up, and as you can see, it touches right where that wick is, and then it sells off, and it comes back up just a little bit, and then it comes back down, right? I mean, this is precision right here. Like, it doesn't get better than that, right? So that would be a supply zone off of a fair value gap. Now, liquidity void is the same as a fair value gap, except for it consists of more than 3 candles. You have candle 1, which makes the supply zone. You have 1, 2, 3, 4, 5 candles worth of a drop, right? That have no buyers or sellers, right? And then it shoots back up, right? Creating a demand zone, right? Because it's a supply zone with a liquidity void, and then it recovers with a demand zone with a fair value gap. So we draw out the fair value gap, and as you can see, it returns to it. It collects 50% of it, right? If I drew this out to the lowest point, as I was supposed to, right there's the lowest point, and then at the beginning of this candle, right, it comes to right around the 50% mark. Look at that box, that's perfect. All right, and then it starts going back up, right? So that's the importance of supply and demand zones, the difference between liquidity, fair value gaps, and liquidity voids. All right, hopefully this helps you guys, and like I said, it's raw teaching because I'm not going to spend forever trying to prep professional classes when it can be explained just like that. So I just gave you guys a class on supply and demand zones and what they were, how you can tell the difference between liquidity voids and fair value gaps, but I forgot to do a live example. So I'm going to go over to the 1 minute chart, and we're going to do this in real time, right? Because like there's a lot of value to that, like seeing it live compared to not seeing it live, right? And the 1 minute chart is the fastest way to do it, you know. So right now, let's discover all the demand zones that we have. We have one right here. We go from a low to a high to a low, right? But in the meantime, we create this demand zone, and we're looking for the ones that are fresh, right? Like that haven't been like violated or anything like that. We got that one. We got one technically right here, and that looks about it for the demand. Alright, we don't have supply. Let's see if we have any supply. So I'll just jump up to the 3 minute, like using it as like a higher time frame. Look at this. This is beautiful. Like we have the supply zone right here, and you see how it's like traded right into. Bam! And then it's shot down, right? The last candle up before the big move down would be this green candle. Let's jump up to the 5 minute chart. You see how they're different, right? Like this demand zone is not recognizable, this demand zone is not recognizable. Everything is fractal, right? So you always start at the higher time zone and work your way down. So if I'm going to play the 1 minute chart, this is pretty relevant because it's going up for a reason. Why is it going up? We need to find that, right? We have a supply zone right here off of a fair value gap, or it could be a liquidity void. Some people would call it that. So let's see if that's where it's heading off of the 15 minute, and let's see if we can watch it go up to it. We got another supply zone right here. We got a high right here that might be trying to take out. Or if it breaks this high right here, because it's a higher high, like we have a break of market structure, right? That means this high gets closed by the body of this. That means it's definitely going to continue up right for now. Who knows, the sellers might have placed their stop losses up down here, and bam. And now they're just trying to go up to the supply, shake out the stop losses from the sellers of these two highs, and then get buyers in, and then guess what? They'll probably drop down to these demand zones, right? Because everything below this has been eaten up. You got buyers and sellers, buyers and sellers, buyers and sellers. But if we come over here, we might have something over here Like it always shoots for like lows and highs, right? Because we know what goes below those or above those, right? And look, this is like I can refine this all the way down off of the lower time frames. Alright, let's jump back down to the 1 minute, see if we got any movement. Alright, let's mark the new supply zone they created, or the liquidity void they created right here. It's leaving a lot on the table when this move up. That means it's like rallying up for a reason. And our job as liquidity hunters is to figure out what it's hunting for right now. So if you look, even if we were doing this from the month down, like it's the same concept, right? So I'm gonna go to the 15 minute, right? And because it broke this structure right here, and it looks like it's about to break this structure right here and take these highs, like right now we're bearish. We're in a bearish market. Even if we have this big drop, it's all about breaks in market structure and like that pick up on the trend, like which higher high or lower low did we just break, and I get my bias from that, right? So we know at the 15 minute we're bullish, 30 minute we're bullish, and oh yeah, good point, is every time we do a break in market structure, we always have a pullback, right? A retracement of some sort. So in this case, we'd retrace back a little bit if we break this, right? So let's see if this happens. Because this was a higher high. These are just equal highs, right? But this is a higher high, right? Because it's higher than this, it's higher than this, right? This is legit. Like if we break this, it's gonna retrace a little bit. Let's go to lower time frame. It looks like it broke it just a little bit and it's starting this downward movement back. Let's draw a line right here. This high. Over. No, doesn't look like we broke it just yet. We barely broke it by a quarter of a pip. But now we're going to see on the 3 minute it retracing back or going up. Wow, look, it's still taking out the orders of this high. While we're doing that, look, this was a higher high because it took out this. If we did a break in market structure here, because these bodies took out these bodies, right? And it took it out right here on this candle and retraced back, right? And then continued its approach up, right? Just like it's doing right now. Well, we see this clear as day on the 3 minute and the 1 minute, right? So we took out that high where this line is and we're dropping. Because we're just retracing. That doesn't mean it's a reversal. For it to be a reversal and put us in a bearish market, we would have to take out one of these higher lows and establish a lower low. We did a little retracement, we're moving back up, alright? See? And you do this off of higher time frames, like month the 4 hour, the 4 hour, the 1 hour, however you play. If you do decide to play the 1 minute in real life, you need to find a company that has a small spread or you're not going to make any money. You're going to lose money even if it goes the direction you want because the spread is too big. This technically is an order block, this spread. Like if there's more than one, this would be an order block because that makes bearish structure, right? So technically this would be an order block. It returns to it at a micro level and it sells off more and then it rallies back up, right? I'll give you guys a separate class on that. And then I'm just constantly going through my time zones. So we took out this high. We did a break in market structure because this body right here, if this closes with a body higher than this point, then it's a break in market structure, right? That means we're in a bullish manner. Alright, if it doesn't, let's say in the next minute it shoots down. Actually, that's the 3 minute. In the next minute and a half it shoots down and just leaves the wick, then all we did was wick it. We're still in a bearish market. So look at this. I don't know why I didn't see this. This is a supply zone. It still could have 50% left in it. It might be just retapping this area right here, right? You always find the origin of the drop, right? So right here I would say this is the origin of the drop because this is the higher high, right? Before we started to sell off. This is the one that matters. Or we can even use this one actually. We're bullish, 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 and then we established the higher high. This matters. This one doesn't matter. I mean, it matters. You can get a play off of it, as you can see here. Like, if we played this and we went short here, it would be like bam, bam. Depending on what our stop losses are, we would have collected all this, right? So you got to identify the higher highs and the lower lows that really matter, right? So if this continues to shoot up, we know that this low low matters because this is the origin of this whole rally. Anyway, I don't have time to like use up all my memory on doing this live. I was seeing if it would work. Alright, later dudes. Hope you got something out of this.